of you who don't know me, I'm Kathy Ramsey. I take care of partnership and our members here at TIC SA with the help of Jess Harris, who'll give you a wave. You might have spoken to us over the last couple of months. A quick bit of housekeeping just before we kick off today's session. If we could ask everybody, we want to keep the session as interactive as possible, but we do invite you just to use the chat functions to ask any questions. If you could keep the voice function muted, and we'll endeavour to work through your questions as we go through the session, that would be fabulous. So let's just, why not kick it off? We've still got some people joining us, but we will kick it off generously today. I'm so pleased to have our partners from Hood Sweeney and Wallmans Lawyers join us to discuss JobKeeper. Many of you who've joined in on our Zoom calls over the last 3 to 4 months would already be familiar with the faces of Priya. She is joined today by Peter from Hood Sweeney, and we have Michael Kay from Wallmans Lawyers. Given the recent announcement and welcome extension of JobKeeper, we thought it would be really timely and helpful to speak to this topic again as elements are changing. So I'm going to start off probably, I think it's also important we look on the future and the changes that are happening in JobKeeper. I think it's important just to reflect on some of the detail of the scheme and summarise JobKeeper 1.0. I'm just going to invite our lovely partners, Priya and Peter from Hood Sweeney, to have a chat. Welcome, guys.
Hi, thanks, Kathy. Appreciate the introduction. So for those who have attended the sessions that we presented in April 2020, welcome back. And I hope you guys are seeing some sort of turnaround with the restrictions changing, being lifted in SA, and the unfortunate border closures both nationally and internationally. So I'm hoping that your business is starting to turn around a bit. And for those, it's their first session with us, welcome. I thought before Peter and I jump into talking about JobKeeper 2.0, I might just introduce ourselves a little bit. So I'm an Associate Director at Hood Sweeney, and Peter's a manager in the accounting space. And between us, we've had about 30 years of taxation and business advice. Hood Sweeney is a South Australian professional services firm, and we've been around for about over 40 years now. And it provides 7 diverse service lines. We've got accounting and business advisory, which Peter and I are part of, consulting and performance coaching, financial planning, technology services, finance, people and culture consulting, and also branding and marketing advisory. Now, we're in the Adelaide office at the moment, but we do have 5 offices, some being satellite around South Australia, and it's in Adelaide, Clare, Burra, Whyalla and Kadina, and we assist more than 3,000 clients. Being SA based, we really do have a strong focus in what we feel predominant South Australian areas, which is agribusiness, wine, food and hospitality, tourism, healthcare providers and not-for-profits. So Peter and I are part of the food and hospitality team, and obviously a strong partnership with Tourism Council. And we've really been focusing on this area for the last 10 years. So that's a little bit about us. Just thought we'd introduce ourselves before we speak, especially for those people who didn't attend the April 2020 sessions and are probably wondering who we are. So that's a little bit about Hood Sweeney. As Kathy said, and for those of you who've not attended these sessions before, it's not a formal presentation as such. We're just going to have a bit of a chat. And as we go through, we will keep an eye on the chat function, so we'll answer some of those questions as we go. But feel free when we're talking to put some questions through the chat function, and we're happy to answer as we go. So today, what I'll be having a bit of a chat about is JobKeeper 1.0, summary of the existing requirements, and changes to the turnover test for employer eligibility. Peter will then talk about the Tier 1 and 2 rates, for those who are not aware of that at the moment, changes to employee eligibility and the nomination forms and the documentation, and also there are some changes to payments, eligibility of the additional employees for the last 4 fortnights in the existing scheme. So this is actually quite a timely session because for most of you who might be aware, this is actually sitting in Parliament today. So we're hoping that the legislation will come out in the next couple of days. So we're just going to talk about what's come out today, because the timing of this is pretty important, especially if you are eligible or you are wanting to do JobKeeper 2.0. There are some payment issues to employees that have to be done very soon in the next few days, which Peter will talk about in detail a little bit. So it's quite a timely session. Ideally, you'd love to wait till just after the legislation, but with the payment dates coming up very soon, it's important to sort of have a think about these things in the next few days or the next week. And just another bit of a discussion, like anything. I know we're talking about cash and the tax office, but there are, you guys as business owners and employers should be conscious there is also some particular legal obligations under the Fair Work Act and other state legislation requirements, which is what Michael will talk about in his bit, and just some of the intricacies in that area. So we're talking more about eligibility today from a tax and accounting perspective, and then Michael will talk about the legal side of things. So feel free to ask, like I said, feel free to ask any questions. But we might just kick it off and I'll start it off. So I'm assuming as this is a JobKeeper 2.0 conversation today, most of you are already receiving JobKeeper for the last 5 months, or you've been exposed to it in some sort of form. This is not the first time you've heard about it. But for those, and most of you would be aware that JobKeeper is the federal government's wage subsidy payment, which enables eligible employees to access a subsidy to continue paying their employees in this current COVID time. So current JobKeeper rules are you can enrol at any time until the program ends at the end of September. You pay your eligible employees $1,500 per fortnight before tax until the 27th of September 2020. And for those who are part of JobKeeper scheme, you also know you have to complete your monthly business declarations. This was originally going to finish on the 27th of September, and I think for a lot of us, we thought in March potentially COVID would be finished and life would be back to normal. In September, there was always that 6-month sort of conversation, but obviously what's happened in Victoria and the fact there doesn't seem to be any real slowing down of COVID-19. Scott Morrison in July announced this will be extended and available to eligible businesses, including those who are self-employed, so that hasn't changed, and not-for-profits until the 28th of March 2021. So another 6 months, but this time they're saying it's going to be at a lower rate. It's not the $1,500 as such. And this is what, when we talk about JobKeeper 2.0, we're talking about the extension of JobKeeper till the end of March. So for the first question, when this happened in July, we got a lot of phone calls here at Hood Sweeney from a lot of our clients asking us when this announcement was made, I'm currently eligible for JobKeeper 1.0, so am I automatically entitled to JobKeeper 2.0? That was the big question we had. And unfortunately, the answer is no. You will need to requalify for the next 6 months. So the issue is, who's an eligible employer for JobKeeper 2.0? This part hasn't actually changed. So for those who've gone through JobKeeper 1.0, and hopefully I'm not going to get confused with JobKeeper 2.0 and JobKeeper 1.0 today, but for those who went through JobKeeper 1.0, the required fall in turnover will remain the same for businesses and not-for-profits. So there's a 30% downturn. You have to show there's a 30% aggregated turnover for those businesses that have a turnover of $1 billion or less, which would be most of us on this Zoom call today. 50% for aggregated turnover of $1 billion or more, and 15% for charities and not-for-profits. So this percentage actually hasn't changed as part of the JobKeeper 2. What's actually changed is there's actually now 2 requalification periods. So before you applied for JobKeeper 1.0, if you met the test, it was valid for the next 6 months. This has now changed. So when you reapply, you have to apply twice now in the next 6 months. The first requalification period is 28th of September 2020 to 3rd of January 2021. And then the second requalification period is 4th of January 2021 to 28th of March 2021. So what we have to prove to make sure you're eligible for the first requalification period has actually changed from Scott Morrison's first announcement. Originally, he mentioned that you have to look at your June 2020 BAS and your September 2020 BAS. Now, to determine if you're eligible for the first requalification period, you only need to show that your actual GST turnover for the September quarter 2020 is 30% less than your September quarter 2019 BAS. And then to determine if you're eligible for the second requalification period, you need to show that your actual GST turnover for the December quarter 2020 is 30% less than your December quarter 2019. So
Priya, could I just ask a question, and it might be relevant for some of our, people joining us today on the call. Some operators may have experienced a strong July off the back of school holidays and increased movement in the state. All of a sudden, it might bring into question if they're going to be 30% down when they come to the end of September. Is there any leeway in discretion that comes into that, given it's not representative of business over the other remaining months?
No, at this stage they're saying, and again, there might be some leeway after legislation, but at this stage they're saying it's actual turnover for the September quarter versus, but if you really think the Commissioner still has discretion, so that test still is available.
Okay.
But it really is September actual, and we are conscious about that. So that's actually a good question. I was going to come to some of the things we're telling clients to do at the moment, just to work out, are they actually eligible? So I'll run through that in a sec, and I'll go through some things like that. Yeah.
Sorry to jump the gun.
That's definitely a question the clients are asking, because obviously
great, thanks.
Businesses sort of changing their restrictions and school holidays and no one can travel. Most clients have sort of had a pretty good July. So
absolutely. Depending on the sector within tourism, but particularly in that accommodation sector have, did experience some increased business, which was great. But to where that positions. I'll run through that I'll run through that sort of stuff. Thank you.
No worries. The other thing I just wanted to note that there are some businesses who didn't qualify for JobKeeper 1.0, and a couple of my clients said, well, am I still eligible, or can I still apply for JobKeeper 2.0? So you can actually apply for JobKeeper 2.0. It is open for new employers as long as you meet the criteria. And the other main criteria is that if you're carrying on a business at 1 March 2020 as a sole trader or had other eligible employees, that's still the same for JobKeeper 2.0. So that has not changed. So the second question our clients have been asking us is their September BAS, for example, is not due until late October 2020. So do they still have to assess their eligibility and pay their employees before the BAS deadline? So at the moment, you don't lodge your September BAS till October, and however, the answer to this is yes, you still have to determine your eligibility now. And the reason why I say that is because, and Peter will go through this in a little bit of detail when he talks about employee eligibility and payments. However, in the next week or so, you do have to, if you want to have eligible employees for this JobKeeper 2.0, there are some payments that need to be made. So it's important now that you look at your eligibility from a turnover test at the same time, because like I think most of you guys remember in April, there was conversations going, okay, we pay the employees, but what happens if we're not eligible? So we do have to determine eligibility now. So what we're telling clients at the moment is get out your September BAS from last year and work out the 30% downturn. What is the number that you have to meet in terms of sales this year to make sure you're eligible? Our clients are currently working through that. So we're going, okay, this is the number you need to make to be eligible. You work out your current sales today and then do a calculation to determine how much more income do you have to make to meet the turnover test. So some of our clients are doing a few different things, and again, you have to be, obviously it has to all be legal what we're doing. So if a client says to me, I'm just going to close my business for a month and a half because I want to meet the turnover test, obviously I'm not going to encourage that. But we've had some clients who are doing some renovations and things like that. It depends on the industry. This is an industry where it's basically cash based. So unless you have really big invoicing or something like that, it is hard to manage that a little bit in terms of how you do it. But again, it's actual turnover. So if you were on a cash basis and you've got some invoicing that you can move, then do that, as long as it's nothing, you're not doing anything illegal or tax fraudulent. We've got some clients who are doing some renovations to their businesses, and they're going to do it pre-September versus do it in October. They're just going to carry it forward. So the business legitimately will be shut down for a few weeks. So the turnover will be met. This is a restaurant. So these are some of the things we're talking to our clients right now to make sure that they meet this turnover test, because we're conscious that July for a lot of our clients had a good month. And now we're working at, we still want to make sure they get these benefits.
Yeah, thanks, Priya. Really appreciate you sharing some of those learnings and some tips of how operators can obviously be prepared as well prior to submitting that BAS as well. A question that's popped up here in talking about turnover, does it include forward bookings outside of the period? So for someone that could still cancel in the future or may require refunds?
It depends on whether you're including that on your BAS, because if you're doing, in terms of the turnover, including forward bookings, if you're treating that as like a prepayment, it depends on if you're doing accruals or a cash basis.
Okay, sure.
Have to look into.
I hope that helps you out there, Nicole. And as I'll recommend, we can further take these conversations offline.
Yeah, offline. Yeah.
Hood Sweeney as well. Thanks. I'll keep you on track there.
Yeah, that's okay. And then just one other thing, just to be aware of. Look, for a lot of our clients, there's this actual turnover, but please note that the commissioner, for those who may have been had to apply for commission's discretion in the past because they didn't meet some of the eligibility, but they still, they had a significant downturn in their industry. Please note that the commissioner still has this discretion to set out alternative tests in specific circumstances. So that is actually still available as part of JobKeeper 2.0. Okay, so that's really what I wanted to talk about eligible employers, and I'm just looking at the questions. So you've got our company registered for JobKeeper 1.0 earlier in August. We were not eligible prior to July, but missed the 14th of August. We can backdate to the first 2 financial payments in July, which I think you're going to talk a little bit about the fortnightly payments. So we'll talk about that in a minute, Russell, if that's okay. And do we have to reapply before end of September? Again, it's about wage payments, but you do have to reapply, and that's when you lodge your BAS, but you will have to reapply. Yes, you do, Janice, that's correct. Again, how that's going to, what date that is, we haven't been told that. Obviously, the legislation still has to pass, but the announcement, the ATO, it'll be the same process through the ATO. I'm sorry, Kathy, I think you're still on mute. I'm not sure if you're talking.
No, that's okay. Yeah, I was just having a look, reading through those questions too.
Yeah,
that's
and
right.
do you currently enroll, do you have to reapply for JK 2.0? Yes, you do. Yes.
Fabulous. And thanks, people. We encourage you to pop those questions through the great group chat to really leverage the wonderful knowledge we have on the call today.
Yeah, no worries. And I think some of the I will get Pete's going to talk a bit about the employee eligibilities and what needs to be done in the next week or so, including there's a fortnightly payment thing. So we'll talk a little bit about fortnightly payments.
Yeah, that would be fabulous. Yeah. It'd be great to learn about those coming timelines, Peter, yeah. Because I think it's really pressing for people to be conscious of as we move closer to that end of September.
Coming up, yeah, coming up.
I'll hand it over to yourself, Peter. Thank you.
Just back to the question. If you did miss the declaration deadline for one of the months, the ATO does have the discretion to be able to include you in that month, as long as the payments were made to those employees during those fortnights. Yeah, the ATO does have, if you missed the 14th of August deadline for July, the ATO does have the discretion to include you in July still, even if you've missed that deadline. So you just need to touch base with the ATO and yeah, apply to be eligible for July. So just to clarify that. All right, so as Priya mentioned, so the first step is to work out if you, the employer, is eligible in regards to your turnover for the relevant quarters. The second part of the eligibility is to determine now which employees are eligible to receive JobKeeper 2.0. So a lot of this employee eligibility has remained the same. One of the main changes that have been made between JobKeeper 2.0 is that the employment date has moved from the 1st of March to the 1st of July. So this could potentially mean that you can now get more employees into the scheme. So some specific examples of where employees or further employees might be eligible are where the employees turned 18 between the period 1st of March to 1st of July. If the employer has employed more permanent staff during the period 1st of March to 1st of July, those new permanent staff will now be eligible. And also where casual employees have ticked over the 12-month period during 1st of March to 1st of July, those casual employees can potentially now be eligible as well. All right, so other than that, the remainder of the employee eligibility remains the same. So there is now a new nomination form, which the ATO have released on their website. If you want that link, we can send that around to Kathy and flick it on to everyone. But yeah, the ATO has a new nomination for employees that become eligible from the 1st of July. So you need to get those filled out and completed and signed by the employees as well. So once you've got the list of employees that are now eligible for 2.0 and they've signed the relevant nominations, then from there you just need to assess which payment rate they're eligible for. So currently in 1.0 there's the payment rate of $300 a fortnight. These have now been reduced based on the average number of hours worked. So for the first period, the 28th of September to the 3rd of January, the two rates that now apply for employees is $1,200 per fortnight for employees and business participants that average over 20 hours per week, and $750 per fortnight for averaging less than 20 hours per week. So I'll just talk about the averaging rule. So effectively, the period that you determine what the average hours is the 4 weeks prior to the 1st of July, which is that testing date. So if they're new onto the regime, then it's the 4 weeks prior to 1st of July that you would test. If they're over 20 hours average per week, then they're eligible for the $1,200 per fortnight for the whole quarter. If they are less than 20 hours per week, then they're only eligible for the $750 per fortnight for the whole quarter. Now, for employees that have been in the scheme since the 1st of March, you can test either the four weeks before the 1st of March or the 1st of July. So whichever one works out more favourable, you can test either or, either period. So that's only for employees that have been eligible from the 1st of March though. All right, so yeah, the new payment rate for that first extension period is $1,200 and $750. And then for the second extension period, it reduces again down to $1,000 per fortnight for 20 hours or more, and $650 per fortnight for 20 hours or less. So that's for the period January to March 2021. So, but employers will still need to make the employee payments to employees before the JobKeeper subsidy from the ATO is received. So you still need to make the fortnightly payments to the employees before the end of each fortnight, before the ATO will give you the cash.
So there are a couple of questions. So does the employee, we've just got a question here, does the employee still need to be a permanent visa holder? Yes, they do. All visa holders are not currently eligible still, according, that hasn't changed. Yeah. So if they couldn't get it before, it has to still be a permanent visa or a special category holder. So that actually hasn't changed as part of JobKeeper 2.0.
So yeah, and the test period for the visa is still the 1st of March as well. So even if they got their permanent residency between this time, it's unfortunately they're still not included. It's still the 1st of March, the test period for visa holders, unfortunately.
Yeah.
Sure, and there's also a question here about casual workers on JobKeeper, but they're not actually working. Do they still qualify?
So they'll still qualify. So if the business meets the turnover test for JobKeeper 2.0 and they've already met the eligibility rules for JobKeeper 1.0, they'll still qualify. But obviously if they're not working, you still have to work out their average hours for that 4-week period, either before 1st of March or 1st of July. And you'll have to pay them on the reduced rates.
Great. Thank you for that clarification there, Peter. And another quick question, and we'll work through these questions whilst they're applicable to this content. We took on an existing tourism business with a new ABN on the 1st of July from another ABN who was eligible for JobKeeper. Can we reapply?
Sorry, I think you.
We took on an existing tourism business.
Yeah.
Yeah, can you see it? Sorry, we took on an existing tourism business in a new ABN on July 1st from another ABN that was eligible for JobKeeper. Can we reapply?
So the current turnover, I think the main thing you have here is the employees. So whether the employees were eligible as at 1 July. Turnover, we believe that the alternative tests are going to be similar to what they currently are. So you'll be able to compare the existing or the new business to the prior owner's business if it hasn't changed. So if the turnover is met, the 30% drop in turnover is met, and employees, you'll probably only be able to go for the permanent employees because the casuals wouldn't have been with you for 12 months or more because it's a new business.
Yeah.
So if you meet the turnover test in regards to the old business and the new business, and you have permanent employees that meet the eligibility, then you'll be able to get it for
2 little factors there. Yeah. Thanks for clarifying that, Peter.
That's when you have to apply for commissioner's discretion too. When instead of the actual BAS, you'd apply for commissioner's discretion because it's a new ABN and explain the circumstances.
Oh, that's a great tip too. Thank you, Priya. A question here from Trevor. They've got an employee newly qualified to JobKeeper with regard to making payments for the 3rd of August for the purpose of recording under STP. Can we do an additional payment out of cycle, or do we have to modify previous pays to have the ATO record the information correctly? What would be your advice to Trevor around that situation?
Is he talking from the 3rd of August, like the fortnights? Yeah, so
with regard to making the payment from the 3rd of August, that's correct.
Yeah, I was just about to touch on this as well. So I might just go through this and that'll probably answer his question.
Yeah, perfect. Thank you. Appreciate that.
So yeah, in regards to the changes that I've just mentioned, there are some possibilities of receiving some more JobKeeper payments for the current regime. So effectively, the employment start date of 1st of March has been changed to 1st of July or the employee test date, sorry. So you could potentially add some more employees to the existing regime. So employees that have turned 18 or that have become permanent, or casual employees that have ticked over 12 months, you can potentially get JobKeeper for the last 4 fortnights in the existing regime for them. So that's something that you need to, if you want to look at that, you need to get done before the 31st of August, because payments to those additional employees that are eligible have to be made to those employees before the 31st of August. So I hope that answers the question. So yeah, potentially any additional employees that meet those new rules as at 1st of July can be added on to the last 4 fortnights of the existing regime. So it could potentially mean an extra $6,000 per employee for the next 4 fortnights that you get onto the regime. So, but yeah, like I said, that has to, if you want it for August, that has to be done by the 31st of August. So that's a bit
coming
of
up very soon.
does that answer, Trevor?
Yeah, I hope that clarifies it, Trevor. What I will encourage everybody on today's call, and sorry to pop you on the spot here, Peter, but TICSA, we do have a forum. So what we might do is look at some of these questions in our forum too, and invite Peter to answer those on the forum as well, because it's wonderful. We've been overloaded with lots of questions.
Lots of questions.
So, and it does provide a great resource for other people as they look through, because often your question, someone else is sharing the same query as well. So it's great we're having these wonderful questions pop up, and we might facilitate that, and I can invite you all through an email on conclusion of this call as well. Is there any other questions you wanted to work through here, Peter, that are appropriate just to touch on at the moment?
So I just thought there was one quick one that you asked if there was a business participant and they had a JobKeeper nomination form before, do they have to redo it? No, it's only for new employees. So anyone new, you have to do it. The old nomination forms are still valid. So hopefully that answers that question.
But you will have to assess the hours. So you'll have to use the reduced rates based on the hours that they're active in the business.
Yeah.
There was also another one just in regards to the regular casual employees. So yeah, if they've been regular and systematic for the last 12 months or more, then they're eligible. So if they've been with you for 2 or more years, I would call that regular and systematic. Just because it's seasonal doesn't make it any less systematic, I guess, than you know, if it was all year round. So I think that there would be fine. That was from Vicky.
And that sort of might lend the same answer to Cleve News Agency as well, talking about a permanent part-time employee who had a consistent level of hours. However, obviously that's just been impacted by some personal sickness.
Yeah. So, well, that one there, if they've, she was working and was getting JobKeeper, but is now on sick leave and will be for 2 months.
Fair Work Act, I think that's probably a question when Michael speaks.
Well, yeah, so if, I guess the hours, if they were eligible and was getting JobKeeper, yeah, so if they were eligible, then you can just test them on the 4 weeks before the 1st of March. So hopefully they weren't sick then. And, you know, if their hours are over 20 hours per week for that period, then yeah, they'll get the higher rate. So, like I said, employees that have been on the existing scheme, they can use either 4-week period before 1st of March or 1st of July. So whichever one works out more favourable, you can use.
Fabulous. Like I said, guys, still pop those questions through, because what we'll try to do is pop them on the forum, and then Peter can go on and answer them in that fashion too. We might continue to move on, if that's fine with yourself, Priya,
Yeah, that's
Peter,
Yep.
because there's a lot of commentary around hours of work and what's deemed reasonable, and I think it's really timely to introduce Michael. He's been sitting there patiently listening on to us have a great chat. Michael is from Wallmans Lawyers, have been a long-term partner with TIC-SA, providing some great advice to our members. Michael particularly leads the firm's employment safety and workers' compensation practice. So I'd like to welcome Michael into the conversation, because there is, you know, it is timely to talk about, there has been some changes and commentary around the change of work hours for employees and what's deemed reasonable. Could you further talk us through what's happening in the broader process of that, Michael?
Absolutely, Kathy. Can you hear me okay?
I can, thank you.
Excellent. Well, good morning, everybody. Look, as Kathy's just kindly said, one of the main roles that we've been assisting clients with in recent months has been the pointy end of JobKeeper issues, and that's unfortunately more the dispute side of things. As Kathy's touched upon, this is a brand new area of law, and with brand new law comes a lot of disputes, a lot of disagreements. So today I could talk to you for hours, but I appreciate you've probably all got better things to do. So I thought I'd try and keep it as interesting as I can by providing you all with just a few snapshots of just some of the, I guess, those real hot button issues that we've seen, and some practical tips for, well, how you can avoid getting in a legal dispute yourself, which is, of course, always preferable. So the first topic I thought I'd start in, and Kathy's already mentioned this quite helpfully, is the reasonableness of the JobKeeper direction. Now, to give you a brief bit of background, if you are eligible for JobKeeper, and you've just heard whether or not you will be, if you are eligible for JobKeeper as an employer, that gives you a lot of power in terms of the JobKeeper directions that you can issue. And that is very powerful. It can be as far as, for example, reducing hours unilaterally. It can even go as far as you issuing the JobKeeper direction to reduce hours to 0. So it's a very powerful tool for an employer, for employers who've been quite desperate for flexibility, given the uncertainty in recent times. However, Parliament, and quite rightly, set an overarching caveat and said, look, employers, you've now got this power, particularly to reduce hours, reduce your workload, but you have to exercise it reasonably. Now, us lawyers love the word reasonable, but for most people, it's a bit of a how long is a piece of string. And with this new legislation, just saying, look, an employer can issue this direction, but keep it reasonable. We all went, that's great, sounds wonderful. What does it mean in practice? Fortunately, we got a decision recently, which I think is a bit of common sense, but it pays to briefly step through. So the decision involved a company called Prasego, I think I'm pronouncing that right. They're a security company based out of Europe, very large. Their Australian arm, they decided to issue a JobKeeper direction to their staff, and they kept it very simple. They basically said that they clarified that they qualified the JobKeeper, and then they effectively said, look, all of our staff, casual, part-time or full-time, you're all going to drop to 25 hours a week. Sounds good in theory, and the fact that it was consistent across all groups, casual, part-time, full-time, did make us that were watching this closely think it's probably okay. The Deputy President on the first instance said, yes, you can't get much more reasonable than pointing to a drop in turnover, and you can't get much more reasonable than putting every employee in the same boat. However, the Transport Workers Union weren't pleased about this, raced off and lodged an appeal, and a full bench of Fair Work overturned that original decision and said, no, we don't think it is reasonable. And 78-page judgment short, what Fair Work found is that by imposing that blanket rule, it actually had indirect, unreasonable consequences. The main one being is that most casuals were working 20 hours or so a week. So that new 25-hour rule meant the casuals' hours were going up. So that created a very interesting legal concept, because even now there's still uncertainty about whether or not you can increase the casuals' hours up to get them up to that $1,500, as I've heard, to get your money's worth. If they are only working one shift, why can't they work 2 or 3 to get up to that $1,500? However, Fair Work at the appeal bench quite rightly said, no. In this case, we don't think that's reasonable that the casuals are getting more hours, whilst the permanents, both part-time and full-time, are dropping. their hours quite considerably. So it largely turned on that point, but I thought that was interesting, because something which on its face you might go, yeah, same rule for all, sounds reasonable. No, the full bench quite rightly said, not that simple. And again, I could go on about this for days because I'm a massive nerd, but what's the takeaway point for all of you? If you might be considering, again, a reduction in your staff's working hours, you have to assess it on a case-by-case basis. Look at your casual staff, look at your permanents, look at your managers, look at your front of house. You need to conduct a global assessment and have a good reason as to why you are selecting certain staff, certain groups over others. Or it could be that in your case you do issue a global reduction of, say, 30% of hours, but you want a good reason for it.
Thanks for talking to that, Michael. And I can understand for a lot of our members, like it is, let's be honest, it can be confusing. So, and it's really important to understand this is where Wallmans Lawyers are there for our members, and they offer a complimentary consult service over the phone. So again, post this call, I will flick an email out with a bunch of resources for you guys. So if you wanted to pick these conversations up offline and further have a chat to Michael about your unique situation, you can definitely reach out to him as well.
Thank you, Kathy. And look, I should add that, the only thing more confusing than a lawyer talking at you for 15 minutes is one talking at you in that context. So I do appreciate that I'm trying to keep it practical, but as Kathy said, a lot of this is complicated. I've been doing employment law for 17 years, and I must confess that even now when I get a JobKeeper direction question, I do have to sit back and think about it, because the law is in its infancy, and reasonable minds can and do differ.
Yeah, absolutely. No, we appreciate your knowledge here, Michael. Thank you.
So just before I go on to stand down, which is again another interesting topic but quite different to JobKeeper directions, did anybody have any questions before I move on to my next ad hoc topic? No, I've stunned everybody into silence. Excellent. But as Kathy said, guys, absolutely, you'll have my details, and I'm always available to take any questions offline, because for precisely the reasons I'm going to stress today, the case law in this area involving disputes is absolutely employer by employer. It's so hard to make black and white rules. So something to keep in mind. So the second topic I thought I'd talk to you all about, and again, because I find this quite interesting, and the reason for that is it's something which I think even the media have publicised incorrectly, and that's the concept of a stand down. Now, to be quite clear, standing down your staff, no pay, shuttering the business is very different to a JobKeeper direction. Stand down is a concept that's been around for 20 years. It's not COVID related, it's buried in the Fair Work Act, and it's something which I should stress that is all or nothing. And that's been a critical mistake. What do I mean by that? Qantas's international pilots, great example. There's no suggestion there the pilots' work has dropped to 70%, 60%, 40%. The work has just pretty much dried up. Another perhaps more practical example for all of you would be when the government health directives shut down pubs and clubs entirely, no exception. And the reason I stress that is because people sometimes get confused and say, well, what's that difference? For example, I can't qualify for JobKeeper, Michael, so should I give this stand down a go? The short answer is no. Unfortunately, even if your business is going through a really rough patch, let's say you are at 25% drop in revenue, you just don't meet the JobKeeper test, but you're still hurting. Unfortunately, if you call me and say, Michael, can we stand down our employees because it's great, we don't have to pay them and we can bring them back when times get better, unfortunately not, no. As I said, unless you've got that all or nothing proposition, you're shut down entirely, you can't rely on stand down. So why is that important rather than just being a negative? I will say that people are still asking us if that's an option. And for all of you in our industry, the short answer is absent your entire premises being shut down entirely, it won't be an option. You're quite rightly focusing on your JobKeeper reductions rather than a stand down. And it might not sound like an important distinction, but legally it is, because I've had clients who thought that stand down was the right thing to do, and the Fair Work Ombudsman is now swirling and potentially prosecuting, largely because they put the wrong label on how they were sending these people home. So something to absolutely keep in mind.
Absolutely, Michael. And just to pick your brains on a couple of questions we've had come to us, Marilyn asks, I have an employee who is casual, but if I were to receive JobKeeper Forum, I'd have to put her onto full-time. Can I change her position from casual to full-time if I apply?
Well, I see no reason why not. And look, again, I'll defer to my colleagues Priya and Peter on that one, because that'd be more across the eligibility piece than I tend to jump in when the jousts are out. But I don't see anything wrong with that. I mean, and it does say, sorry to correct you, Kathy, it does say I have an employee who is a casual. Could I put her on full-time? I see no reason why not. The critical test will just be her income and her hours. So whether that's casual or full-time, and how that interacts with 1,500, soon to be 1,200, would be the critical question.
And I think Peter will be able to clarify that for us, and we'll pop that in the forum as well, guys, because it just comes down to those couple of elements he touched on. Oh, he's appeared.
Yeah, look, I think as long as they were eligible, you can move them from casual to full-time, that's fine. You'll still, obviously the hours will still have to fall within that testing period, and that's the payment rate that'll get based on. But yeah, there's no reason why you can't change an eligible employee from casual to full-time. Yeah.
Oh, thanks, Peter. And another question we've had that's come in from Mel in relation to JobKeeper 2.0, can we still have the flexibility over the type of work we offer, Michael, as long as it's safe to do so within the employee's capabilities, obviously? Do we still have to adhere to minimum hours in all awards or EAs, or is there any sort of flexibility? What's your sort of advice in this situation?
Mel, I feel you could be an employment lawyer in the making, because you've qualified your question perfectly. I literally would have answered and said, yes, absolutely. You are free to engage people largely in the manner you see fit. You can still have a casualised workforce. You can engage your part-timers. But as you say, as long as it's within their reasonable skill and competence, or as you call it, capability, and as you say as well, as long as you're complying with minimum rates, is the main thing in the applicable water, etc. That's fine, because the important thing in a global sense to think about JobKeeper, although we look at it very much as an employment entitlement, with these sorts of questions, it's often good to think about it as almost analogous to welfare or a Centrelink payment, in that here it's not intended to be that rigid that it stifles business. To the contrary, that's why the employer is reimbursed. The concept is the employer largely goes about business as usual to the extent they can, and the government is chipping in to help that. So try to look at it more that way, that it's something which you do have that flexibility, but as you say, you've just got to be careful that you're still fitting within, well, the usual and ordinary rules that will be with us forever, which is award compliance.
Yeah, thanks for that, Michael. And look, guys, I'm really conscious of everybody's time today, because we've all generously come on board and connected. So I thought I might just ask if Priya and Peter could come back online and potentially ask a question to all three of you in terms of what would be, in terms of for our audience today, and a lot of these questions, as I said, we'll put on our forum and get some answers from our expert advice we've got today. But for yourself, Priya, Peter and Michael, what would be your key piece of advice you would give to business owners over the next 6 to 12 months? Like, let's looking ahead. We know that this JobKeeper is not a long-term strategy. It's there to support during this critical stage we're going through. So Priya, what would be your best key piece of advice you give to some operators and our audience today looking forward for the next 6 to 12 months?
I've got a lot, but I'll try and I'm sure Pete's got about 5 or 6 ideas too, but the main one for us is we've just been thinking a lot about our clients, and the cash flow booster that everyone's been had, which is about 50,000 for the first 6 months and nearly 100 grand on cash flow. And then obviously JobKeeper running out. We're really conscious about our clients' cash flow at the moment, and their cash, and we're doing a lot of rolling forecasts and that sort of stuff, just because one of the things that have happened, obviously business has changed quite substantially, and the government's given a lot of businesses a lot of cash at the moment. That's going to stop. So how do you keep your business going when there's no more subsidies or anything from the government? So we're talking to clients about cash flow and where they're sitting, and I guess trying to understand the next 6 to 12 months once all this money from the government stopped, because that's going to be the issue. Have they got enough working capital? Have they got enough? Because we don't want this to stop and then their businesses have sort of been propped up for the last 6 months, and now we're looking going forward.
Yeah, I agree, Peter. And I know this word is bandied about a lot, but this business continuity planning is vitally important, because it's not just about obviously the advice and the tools and the tactics for now, but it's also about positioning your business to bounce back and actually thrive once we come out of this, because we will come out of it too.
Absolutely.
So I agree. Peter, let me put you on the spot.
Yeah.
Your best piece of advice.
I guess,
few points.
I guess one thing I would advise is to just look at your business and what you could potentially do differently, or how you could potentially adapt to this new environment. So whether you haven't already, or whether there's still some further things that could potentially be done, that you might look at other revenue sources, or just other ways to generate business, or so just thinking outside of the square a little bit, like you've seen a lot of businesses do over the last 6 months, just being a bit more flexible, and working out what the best way forward is, and what might be different in the industry in the future. So just considering that, planning for it, and putting something in place to kind of adapt.
I agree, and I think I know there's a saying around this, Peter, but it's also the fact is it's not going to hurt to try something new, is it?
No.
So it's now's a good enough time than anything to test the market. We're a real local market at the moment, so it's an opportune time. It's not going to hurt.
Yeah. I totally agree with that 100%.
Yeah, fabulous. And lastly, Michael, what's your key takeaway that you'd like to give to our members and audience joining us today?
I haven't mentioned it yet, but I think that probably the most important word that I want to leave everybody with, excuse me, I'm getting choked up about it, I'm so moved, is consultation. Now, it's a word that's often bandied about, and what do I mean by consultation? Before you make a decision, let's say you are changing hours, let's say you're proposing a shift change which is significant, make sure you talk to your staff about it. It doesn't need to be a lengthy process, but ideally, if you are doing something like reducing hours, you want at least an email or a paper trail showing that you consulted with them. Importantly, consultation doesn't mean agreement. By having these meetings with staff about what might be happening, you don't have to reach consent. Unfortunately, you sometimes won't. But consultation is so critical. All the cases that we're seeing where employers are getting in trouble, say their redundancies are being overturned and they're forced to reinstate, or fair work is circulating because of a potential award breach, would you believe it's almost always because they didn't sit down and talk to the staff before they made the call, before they issued the direction. So that's my main tip, because consultation's always been important in industrial law, but now more than ever, it's something you've really got to be conscious of.
And an absolute great piece of advice too, Michael. So thanks for sharing that. And consultation towards, seeking out the knowledge, guys. We aren't all expected to be experts in all these fields. And that's why we aimed at TIC-SA to deliver you these connections with our fabulous partners as well. I really have to say thank you to everybody joining us today. We've had some lovely organic conversation. And still, I understand a lot of people have got a lot of questions they want to ask. So I don't want to actually stop. I understand we're all time poor, but I don't want to stop the conversation here. And I will connect with you all via an email afterwards. And as I said, we're going to pop these questions on our forum. And whilst I've put our the generous time of Michael and Peter and Priya, I'm putting them all on the spot right now, but I will ask them to come on board our forum and potentially ask some of those questions, and they'll serve a purpose for a lot of other people too. So continue those questions coming through. I'll flick you all as in that email as well. It will contain the contact details for Priya, Peter, and Michael for you to connect. We are so lucky to have our wonderful partners on board offering wonderful advice. So seek it out, because we're not meant to be experts in all this during the challenging times we're presented with. So I just want to say thank you. Thank you to Priya, Peter and Michael. You've been so generous with your time today. And thank you to our audience for joining us. We look forward to connecting again. And yeah, I hope you've all enjoyed this session as much as I have. It's certainly been very knowledgeable. Thanks, guys.
Thank you, Kathy, and yeah, appreciate the opportunity, and we'll be on the forum to answer all these questions.
Yeah, thanks everyone. Thanks for your time.
Agreed. Thank you all. It's been a pleasure.
Thanks, guys.